So you guys are all in town for our big small business summit, and nothing gets the blood flowing at 8 a.m. like a talk about tax policy and administration. So welcome.
Yeah.
We got a good panel here today to talk about an item that I imagine if it's relevant to you, you care about it a lot, which is the employer retention credit. First of all, my name is Watson McLeish. I'm the tax policy lead here at the Chamber. And then seated to my left, we have Tom Cullinan, who's a partner at Chamberlain Hedricka and former counselor to the Commissioner at the Internal Revenue Service. And then to his left, we have Matt Kelly, Vice President, Tax Consulting Solutions with Experian, and then his colleague, Adam Taplinger, who's a Business and Corporate Development Specialist at Experian. Experian has been a solid partner to the Chamber and our small business co-organization, and they're good folks to help navigate this topic. I've been asked to save the last 15 minutes for questions, but we're really small groups, so just raise your hand. I mean, if we're talking about something and you have a question, just let's keep it informal. I think to sort of set the stage, the employee retention credit, to me, it was kind of a sleeper issue until this year, when all of a sudden in March, the IRS put at the top of its annual, they call it Dirty Dozen list, number one issue was potential fraud associated with claiming this credit. A little later in the year, the IRS started getting a little bit of heat from the Hill on both sides of the issue. One, how come it's taking so long to process these claims? And the other is, what are you doing about fraud? The price tag is starting to go up on these claims. And then most recently, last month in September, on September 14th, the IRS announced a suspension of processing new employee retention credit claims, a suspension temporary through the end of the calendar year while they, I guess, process their remaining backlog of claims and reassess how they can address potential fraudulent claims, of which the concern is that there are more than a few. So we actually put this panel together back in late August, and the thought was, okay, we have members and small business members who claim the credit. Small business members who are entitled to it, that want to claim it, and they're having issues with, okay, do I have to amend my return? What does this mean? What is the process like? And then there are folks who are worried about, hey, I filed the claim, it's been 2-3 months, I haven't heard anything. And then to sort of hopefully increase the draw, the IRS announced this moratorium on processing of claims. So there's been a lot of interest. So I think it's a timely topic. I'm delighted to have these guys here, and I think I'll throw it to Matt to sort of set the stage, and maybe you can give a flavor of what you're seeing in the marketplace and how you're helping clients.
Sure, thank you. So hopefully what we can present today is a non-emotional perspective on what's happening right now, because there's obviously, in a good year, a lot of fear around taxes, and now with small businesses that have claimed the ERC, and this being put on the Dirty Dozen, as Watson mentioned, with the IRS issuing on a fairly regular basis their concerns with fraud and claims that will be audited and maybe even prosecuted depending on the level of fraud. We're hoping to provide you with a very fact-based perspective. What we're seeing right now is the IRS is in a tough spot. They were told at one point to hurry up and process this as quickly as possible, and probably, as Tom can relate very well, probably the same day, they were told to make sure that they prevent any fraud from happening. So to be able to do both of those things puts them in a very difficult position.
Yeah, let me interject on that. So the original legislation also included a requirement that the IRS had to go out and tell small businesses about the credit and how they could qualify. So if you go back in time and you look at the IRS's old Twitter feed and Instagram, you'll actually see pages where the IRS was going out and promoting the credit and was putting it out there and telling, go talk to your tax advisor.
Which is pretty unique.
This is money. The IRS, it was a crazy time, right? COVID was crazy for everybody. And the ERC was one piece of what the IRS was doing. We had EIP, we had the ERC, we had filing season, and IRS is full of people just like you. They're your neighbors, they're people in your grocery stores, your churches. We sent them all home. they were affected by COVID the same way that your businesses were affected by COVID. And so to try to implement this legislation while all of a sudden you're taking 80,000 employees, trying to gear them up to work remotely, I mean, it was just a crazy time, but the IRS took that responsibility very seriously. And I'm proud of the work that we did. I'll tell a quick story. I went to a bar here, and I heard about this bar concept. I don't know if you've ever been to one. It's pretty fun. So I went to a bar this one night, and this was probably about late 2020, and the owner was talking about how the ERC kept the business. It was a family business, 25 years, and without the ERC, they would have gone under. And I didn't tell him who I was or what I did. He was just telling people behind the bar, whoever would listen, that the IRS was great. I walked out of there feeling 10 feet tall. I was proud of what we had done. ERC was a lifeline to small businesses. There's a lot of noise in the system right now, but I think one of the message, to the point about not being emotional, if you're eligible and you qualify, you shouldn't have anything to be concerned about. It's a credit that Congress put in place for you to deal with COVID.
And I think what we're seeing right now is before, because of some of exactly what you're talking about, Tom, there were people saying, hey, my friend got it, I want it, and who's the best provider out there that can give it to me, and what's the best financial deal? Like, oh, you contingency, I'll have to pay you if I get paid, great, let's do that. And so you had people, I don't want to be overly critical, but you had people that were not tax professionals that were pushing this aggressively. In fact, they were probably providing more ERC support than the tax professionals were, and the IRS saw this, they noticed this. And so it's created some problems. But to Tom's point, the IRS has been fairly transparent. They've issued notices that outline what they would be looking for in an audit. The audits that we've seen, the IDRs that have been issued by the IRS, have not varied from what they put in the notice. So right now, what I'm seeing from a practical perspective, Watson, to your question is, it used to be clients would get mad at me if I said, hey, I don't know that you qualify, or I don't know that you qualify, you certainly don't qualify for all 6 quarters. You're not going to get the max $26,000. Maybe you're going to get these 2 quarters. And they used to get, how dare you say that? Like, my friend got it, my brother got it, like I should get it. And now what's happening is, hey, can you talk to my attorney, Matt? Because I want to make sure that we're doing this the right way. And he or she has some questions. So we're seeing a lot more caution, which is what the IRS, I think, was trying to accomplish is, hey, don't stop claiming this, but be thoughtful about what you're doing so that we're doing it correctly. And absolutely, it's still available. I think that's maybe the most important message right now is the IRS has issued a moratorium on processing claims as they try to take a step back and consider how to prevent some of the fraud. This doesn't mean that the ERC program has been shut down. It doesn't mean that they're no longer accepting 941X claims for the credit. They're just not processing the refunds right now. That should start up, I think they estimate in December timeframe, they'll start issuing refunds again.
And so that's a great point, Matt. And I got a call from a client on the way up to this event yesterday on the plane. And it was a client that had a fairly large claim. It was over $3 million. And they called me in a panic. I usually don't take calls as the doors are about to close because I don't want to draw the ire of the flight attendants. But I took the call. And he said, Adam, I'm really nervous. Everything I'm hearing is really negative. I'm really concerned that there could be some criminal prosecution of this. And I said, just hang on. Let's take a pause for a second here. Your business was clearly affected by COVID restrictive measures. You've demonstrated to us as your provider that through these restrictive measures, not only was your business impacted, but you showed us operational metrics. You showed us how your business was impacted. That in itself is enough to create validity for your claim. But beyond that, you also described to us and told us that you had to go out of pocket. So you went into your personal funds to put new equity into the business during the time of COVID. And on top of that, you still haven't recovered to this day because of some of those actions that were taken by some of the state and local governments in which you work. And so he said, you know what? He said, I feel a little bit better after that. And the reality is that across the spectrum of companies that are eligible for the ERC, there's folks that are aggressive and there's folks that are less aggressive. And the reality is that what we do on a daily basis is we try and encourage the folks that have good claims and reiterate the fact that you have a good claim, you have a valid point, and we try and sort through, from our perspective, as almost the tip of the spear. We sort through that and say, look, if you don't have a great claim, we can't help you. And I think that's where the IRS now is really drawing a line in the sand and said, look, a lot of claims have been thrown over the wall to us. We want to make sure that the companies that are eligible get this credit, but since there's not a ton of discipline by, as Matt said, some of the providers that are out there, we're dealing with a mess. And so this is their best way of dealing with the mess. And so, but the reality is, as Matt also said, and as Tom also said, if there's a valid claim out there, then this stimulus was designed for that company, and they should indeed claim it.
So let's talk for a minute about what's probably going on inside IRS. So I was there for 4.5 years versus counsel to the commissioner and acting chief of staff. And so I've walked the halls of Congress. I've talked to a lot of members, a lot of senators about things and staff. And they're obviously struggling. So these press releases that are coming out, you can see that they're concerned by what they're seeing. In September, when they announced the moratorium, as part of the press release, they stated that they've received 3.6 million claims, a bit more than probably they anticipated and estimated. In terms of revenue estimates, Joint Committee initially scored the credit at, I think it was 86 billion combined for 20 and 21. As of March, IRS had paid out, or I don't know if it had paid out, but it received at least claims of north of 150 billion. And Wall Street Journal reported, I think it was 2 weeks ago, that the number now is closer to 230 billion, although nobody inside the government that I'm aware of have confirmed that. So that's roughly triple the original scoring. And companies can still file claims for 2020 until April 15th of 24, and your claims for 2021 until April 15th of 2025. So you can see, and part of this Wall Street Journal article was really disturbing too, because you saw the claims going down like this, as you would anticipate, because most people that were legitimately eligible for the claim would want their money, and they're going to file sooner rather than later. There are some that, you know, they're not sure, and they don't know if they want to risk an audit, and so they'll come in late. But so the claims were going like this, and then all of a sudden they went like that. And I think that, if I were still there, that is something that I would have focused on. What caused the claims to go like this to all of a sudden, you know, off the chart over the last 2 months? And I think what might be going on, and there's a woman at IRS, Carolyn Shank, she's the National Fraud Counsel. She did a webinar in July, and she explained actually that they're seeing 3 different types of fraud. One is, you know, the small businesses that are filing that clearly aren't eligible, okay? But then they're also seeing fictitious entities being created. And, you know, think well-funded organizations that are just pumping things into the system. And then they're also seeing identity theft. So, yes, identity theft isn't just for individuals anymore. There are actually people out there that will steal the identities of businesses, corporations, and entities, get your TIN, get some information, they file as though you were them. They'll direct the refund check wherever, you know, they want it to go. And then you'll go ahead and file your return, and you'll find out, wait, somebody's already filed, you know, as me. So that has become, that was always much smaller than in the individual space, but, you know, Carolyn in her comments had indicated that is something that they're seeing. So, you know, I don't know, I'm not there anymore, so I don't know if that's what caused this, you know.
This would have been a great opportunity for you to replug the IRS's social media feeds, because maybe it was finally getting traction, you know, so many people following the IRS. But
yeah.
I think there's probably a combination of the fraud, but also you can't leave Washington without turning on cable TV or listening to the radio and being inundated with ads to get $26,000 per employee. And they make it sound like it's, you know, no strings attached, no questions. It's, you know, it's just easy. Just call this number and, you know, no upfront payments. And I think, you know, the cumulative effect of this sort of hitting everyone and in the psyche, and then hearing about your neighbors getting it, or your other business people at your golf club or your church, whatever, just hearing this story about all these people getting non-insignificant amounts of money from the government, I think has had sort of a snowball effect. Now, yeah, and that was compounded, I think, recently. Another good Wall Street Journal article about one of the firms responsible for this. But you started seeing like A-list celebrities appearing in some of these ads now on national television, including during the Super Bowl. So I think we're at the point. We're also slowly getting, this drumbeat is increasing, as Tom said. And Matt mentioned earlier, the deadline is slowly approaching, right? You have April 2024 to claim for the first year, and then a year later for the second year. So I think it's probably not terribly surprising. This is also an uncapped appropriation. So there's no, unlike the Paycheck Protection Program, the PPP loans, there is no cap on this. And so the potential for fraud is rife. And so maybe we can pivot now to, so we've got small business owners in the audience. So let's say someone's filed their claim and they haven't heard anything, and they're starting to get a little nervous. Maybe they didn't hire the Experian or go with their lawyer or accountant, and they're a little concerned about what they might expect from the IRS. Maybe you guys could speak to that.
Sure. I think the IRS has even acknowledged that this is a bigger problem, and to the point where they said, look, we're even focusing on some of the providers, and we acknowledge that some of the businesses have been taken advantage of by the providers, so they really are trying to find out if they can identify some bad actors on that side. They've recently announced that they are going to be rolling, hopefully today actually, we're expecting them to release formal guidance and process instructions on a withdrawal program. So if you filed and received or have not yet received your claim for ERC, they're going to provide a process by which you can withdraw your claim. Either give the money back, or if the refund hasn't been processed yet, just completely withdraw the claim so that you're no longer on their radar. Your claim's been nullified. I think this is important because from a process perspective, looking at IRS employment tax and tax exempt, which has been dealing with these, this is a lot of paper. This is a very difficult thing for them to process. I was talking this morning, I'm flying to Houston on Sunday night to work on an audit for one of my clients in Houston on Monday. They want to do it in person. And it was a fairly simple audit in that we see this a lot, unfortunately, the payroll vendor for this client had taken the calculation that we provided, and they put a different number on the 941X. I don't know where they got that number. They don't know where they got that number, but they put the wrong number on the form. It flagged an audit. We looked at it, yep, that's the wrong number. You shouldn't have used that number. But when I talk to the auditor and say, hey, this 941X is wrong, but also so are these two, and the auditor's like, well, send me those, because I don't even have those. I haven't even seen those. I'm only looking at one. And so the amount of paper and the amount of things they have to do, so hopefully this withdrawal process will make this a more efficient process, so you don't have to file a new 941X, and hopefully they find that before they process your old 941X.
You're telling me this will be a paperless
right?
withdrawal program?
Right.
But the issue there is, I wonder how many people are actually going to do it, because if you filed the claim and you think you got a good claim, there's absolutely no reason. And a lot of people that file the claims, they either relied on one of the companies that were advertising, or they did rely on their accountant, or they relied on their attorney, and they trusted them to do the right thing. And there are some people that probably were I'm sure there were people that were living on the edge that might have some misgivings. But otherwise, the only way that you would know whether you have a good claim or not is you're going to have to go hire somebody else to give it a second layer of review. You can hire me, you can hire these guys, whoever you want to do that. I don't know how many people are actually going to take that step. Obviously, the IRS is trying to do the right thing here and give people an option that if you feel like you're not sleeping well at night, if you've got some doubts, this is a way, as Matt said, you can get out without penalties. The more interesting thing, they've also announced that they're going to be having a separate settlement program for folks that have already gotten their checks. And we were talking this morning, the hard thing, and I don't know what the IRS is going to do with this, the hard thing for them is, to Watch's point, there were a lot of these service providers out there that were advertising on the radio and whatnot. Virtually all of them were getting paid on a contingency fee basis. So they took whatever it was, 25%. And so now if I'm a small business, Watson's my service provider, Okay, so I got my $100. I gave Watson 25, so Watson's got 25. Now the IRS said, okay, you want to unwind your claim, we'll give you away, and just give us back the $100. But wait, I've only got 75. Hey Watson, can you give me my $25 back so I can get right with the IRS?
And you're assuming I'm still in business?
Yeah, yeah. Watson, where'd you go?
Watson's in
Yeah.
the Caymans.
So yeah, that's forthcoming, and again, we'll see how many people take advantage of it.
But it's important. It's important that there's a mechanism that the IRS is putting, and it's important that hopefully it will be pretty easy to use, and will give taxpayers, small business owners, certainty if they choose to avail themselves of it. What do small business owners that may be concerned that they went with a less qualified promoter firm, where they think they may have an issue? What is at risk if they don't avail themselves of the settlement option? Are we talking about just some interest? Are there penalties that could apply?
Yeah, there can be penalties.
And what's the benefit of the settlement program, I guess, would be?
Again, sleeping at night, comfort, avoiding penalties. But what's at risk is, well, first, not everybody's going to get audited, right? There are 3.6 million claims. The IRS has roughly 7,000 revenue agents to cover all individuals, all corporates, all tax-exempt, estates, trust. The audit rate here to get to 1% would be, what is that, 36,000 claims? To audit 1% of the inventory, they'd have to audit 36,000. They're not going to audit 36,000 claims. They don't have the people to do it. So they're going to go and they're going to stratify, and they're going to use, they'll come up with various data points, and they're going to stratify the claims to go after the ones that, pop, the worst of the worst. Or if, to Watson's point, again, back to the service providers, if they find a particular service provider and they get some hits that those claims are bad, it's easy enough then to track who else used that service provider, and they'll audit a disproportionate number of small businesses that were using that. But they're not going to audit everybody. So you think about, okay, what's the likelihood, if I really tried to get it right, what's the likelihood of the IRS coming? Of course, you look at your statute of limitations. There is a unique thing here that it's bifurcated. The first couple of quarters, you have your normal 3-year assessment period, but Congress gave the IRS 5 years for, I think it's the last 2 quarters? Just the last one. So they've got a longer period. Although, Watson, did you want to talk about some of the legislative proposals?
Well, just before we get to that, so you've talked about what is potentially at stake, and that the risks of audit are low. But let's say, just for everyone's peace of mind, let's say you're in a position where you do get a letter from the IRS, and as I liked how Matt said it earlier. Let's take the sort of the emotion out of here. Just what does that look like, and how and what advice would you have for a business owner in that position?
Yeah, and I think there's probably a lot of people in the audience, either here in person or virtually, that are wondering, well, how do I know? Like, without paying another person to tell me, how do I know if I've got a good claim? And I think, look at your file. You should have a file, number one. If you don't have a file that supports your ERC claim, I would be nervous. And then if that file doesn't include, for example, if you based your claim on the government order, partial suspension test, then you should have government orders cited. You should be able to look them up. You should be able to verify that they exist. And there should be an analysis of how those orders apply to your business and how it affected your business, using hopefully a quantitative metric of a more than nominal impact. If you have that file, then when you get the letter from the IRS, it's going to ask for that. It's not going to ask for some obscure piece of information that you had never thought about or that they shouldn't have thought about. It's fairly direct as far as what they expected to see, what they said they wanted in the notice. So you're going to want to be able to provide your calculation. You're going to be able to show the math. You're going to be able to show that you actually had the wages, that you did the math, and you looked at the $10,000 limitation and the 50 or 70% multiplier. If you're a large employer, they're going to want to know how you determine whether somebody was working or not working and determine qualified wages. Either way, large or small, you're going to have to show how you determined that you were eligible for those periods. And if you can show that, then you should be comfortable. We are seeing with the IRS, and we haven't had a lot, so I don't want to act like we've had tens or even hundreds of IRS audits so far. We've had a handful for my clients. I worked at EY before I came to Experian, and I know some of my EY clients were audited as well. I was involved in those, so I've seen some of those as well. But we haven't had a lot. But what we've seen is mostly been consistent. There is a focus from the IRS on revenue. Is your revenue up or down? Even if you're doing the government order test, they still want to know, well, how can your revenue be up and you're still partially suspended? So you need to be able to explain that if that was the case. Maybe there's a different metric that's better suited to measure the impact of a government order on your business than revenue. Maybe inflation caused your prices to go up, but your margin was down. There's different ways to look at that. But I think, Watson, to your point, that's what you need to be prepared to speak to if you get this letter from the IRS. They're going to give you usually about 30 days to respond. We've called them and asked for more time. They've been very helpful about giving more time, but you're going to have some time to respond. And then we haven't seen a lot of them closed yet. That's the odd thing. We've had them come out and say, hey, we have all these questions, and we've answered their questions, and they said, we'll get back to you in a few days. It's been months with some of those, and I think this kind of goes into the moratorium when the IRS took a step back to kind of figure out what they were doing and how to do it. But most of those have either, a few of those have gone silent, and a few of those have closed. The good news is, from what I've seen with the work we've done, or I did at EY, there have not been any adjustments. But again, our audit files, we call them, were robust. They had a memo in there. They had the calculation in there. They had a detailed analysis. Just like anything else in tax, it really doesn't, in my mind, it's not that different from an R&D credit or other tax credits. You have to document it. And if you're expecting, to your point, these vendor called you and they promised you'd get $26,000 and nothing up front, and you can have it and they'll have it done in 3 days, then you're probably going to be worried about what you've done. But other than that, you should have everything in file.
You still might qualify, right? The law, there's basically two ways to qualify. There's a gross receipts test, and then there's the full or partial suspension. The gross receipts test is basically math, right? You can figure out pretty quickly whether you qualify under that or not. But the full or partial suspension due to a government order in response to COVID, that's kind of gray. And that there's a lot of arguments there, and that's what we do. That's what Experian. That's what other folks in this space do. You apply the facts to the law. All the statute says is full or partial suspension. What does that mean, right? And then the IRS comes out with 100 pages of detail telling you what it thinks it means. And obviously, the safest thing, the most conservative thing to do is, well, comply with the IRS notice. But the IRS, that's just. Keep in mind, that's the IRS's position in terms of how the statute should be construed. There's going to be a lot of argument here. There's going to be a lot of litigation. There's a lot of dollars involved. I think that the point here is if you go to reputable counsel and you're relying on the full or partial suspension test, I don't know that anybody's going to be able to tell you, you absolutely qualify. It's certain. There's always going to be some gray area in that because it's just a subjective test, and Congress didn't really give us any detail or guidance about exactly what that means.
And that's an important point. And one thing we haven't covered yet is that does it really have to be a zero-sum game? Is it really an all or nothing? And I have clients come to me all the time and say, look, I've claimed this with my payroll provider, and I claimed $5 million, and we take a look at it and we say, this doesn't look exactly correct to us. It looks like perhaps there was one quarter that may have not had the true substantiation and the data. And so what's important to think about is there's a lot of concern, there's a lot of thoughtful diligence going on in the eyes of clients. But what they're missing is that they're concerned that they need to pull the whole thing back to be in compliance. And that's just not true. They can take another look, and again, it may require hiring a second vendor, which in many cases may or may not be worth their while. But certainly the outcome, if they're looking at two binary options, one of those options is just pull the whole thing back, or was this done correctly by the folks that I originally hired, or did I just tell my payroll company to go do it? And that's actually where we see most of the errors of magnitude, where certain payroll companies will say to their clients, hey, are you interested in claiming the ERC? And the client says, well, of course I am. Of course I want this money from the government. And the payroll company says, great. And then 6 months later, a check for $2 or $3 million shows up in the client's office. And the client says, well, why did I get this check? And so we see a lot of concern that if this does need to be returned to be in compliance with statute, that it's really going to a zero, right? But that's not always the case, and people should take that into account.
That's good advice. I mean, look, ultimately, it's going to depend. It's going to be you're going to weigh the cost benefit. I mean, if your claim is for 2 or 3 employees, you know, maybe it's a different situation for where you've got a claim for, you know, a credit for $3 or $4 million. I mean, then it might be the peace of mind and the cost of getting a second look, you know, that equation changes, right? Just on the dollars and cents. So let's say you're in that position, you filed your claim, whether or not you've received the credit, and you think, okay, maybe I do want someone to take a second look at this. When does the statute of limitations begin to run? Is it at the date of your originally filed return? Is it the date of your amended return? Let's assuming you amended your return to claim the credit, like most businesses are doing. When does the clock start to tick on that?
So my understanding, and please correct me if I'm wrong, is that it's the normal 3-year assessment from filing.
From filing?
Yeah.
And that would be the last filing or the?
No, your original return.
filing, okay.
Yeah, and the way, as you already mentioned, the April 15 deadlines is how they're construed, right? So for all of your 2020 claims, the last date that you can amend a quarter in 2020 will be April 15, 2024. And for 2021, will be April 15, 2025. And as Tom pointed out, that isn't necessarily determining when the IRS can audit. Legislatively, they've extended Q3 of 21 to be a 5-year period for audit. That doesn't extend the time to claim it. That's just the audit period extended. And I think legislatively, they're at least considering, I don't know that anything's going to happen legislatively anytime soon. Doesn't seem to be. But at least they've considered extending all of them out at least 5 years for all the quarters if they go back.
And from what date?
It would still be from the original filing date.
Okay.
Which is deemed to be that April 15th.
That's right. This is
So-
deemed to be
so
April
for the
15th,
last quarter
following the last
of
quarter.
Third quarter of 21, so
Yeah.
that would make it April 15th of 2027.
Correct.
Okay.
Correct.
Now, I notice we've got about 10 minutes left. I mentioned earlier before some folks joined, any questions, please just raise your hand. Any questions about a friend's business? You know, you can just raise your hand. Please, yeah, don't hesitate to interject. So I think you guys heard some breaking news here earlier. Tom mentioned that later today we expect to see the IRS announce this special withdrawal option. The IRS has also previewed this. They're working on a settlement program that could come out, which based on our understanding, would you know, sort of be like the other voluntary disclosure programs where you're taking the penalties off the table.
Yeah, it's essentially what I would anticipate, and I haven't seen it, I don't have any inside information, but just based on history, when the IRS would come out with these types of voluntary disclosure settlement programs, yeah, it would open to as broad a population as possible, that they want to encourage taxpayers to come back into voluntary compliance. There's a huge resource issue for IRS. The less that they have to do, the better. If they can get taxpayers to unwind their own positions so that they don't have to deal with it, they're all for that. There are usually some carve-outs. I would anticipate that there would be carve-outs if you're already under audit. That's traditionally a carve-out. If you are somebody that, for whatever reason, may have been referred to IRS criminal investigations, that's also a potential carve-out. I don't anticipate a lot of small businesses being referred to IRS criminal investigations, but you could be connected to somebody who has been referred to IRS criminal investigations. So,
Your vendor, maybe.
yeah, if you used a certain service provider to file the claim, and that service provider is under scrutiny, there may be a carve-out for there. They don't always do that, but that's possible. And I would anticipate that it's just going to be an online mechanism. And it's going to be more of an IRS side of things that is going to be an issue than it is probably for taxpayers, because inside the IRS, and I think it was Matt who made this point, there's paper all over the place. The 941Xs were filed in paper during a pandemic. You know, when people are working from home, I don't know if you saw any of the pictures in the papers about like some of the IRS cafeterias just with boxes and boxes of paper. You know, that's really what it was like. I mean, so just to talk to a revenue agent, don't think that they're going to have like all of your returns and all of your paper in one spot. Traditionally, one of the first things a revenue agent asks for in an audit is, can you send me your tax returns? And you know, you kind of think, well, that's kind of funny. You would think that you would have those, right? But no, they don't. You know, they might have one. I mean, these papers come in, and it's the most bizarre thing, right? I saw this one of the first campus tours I took. They have teams of people that are transcribing the tax returns. I'm like, did you ever hear of a scanner? You know, technology, a whole nother conversation. Maybe we can do something on that someday. But yeah, so you know, you're going to have an opportunity. And again, if you use a service provider and you already got your money back, you're going to have another opportunity, but that's just further down the road.
So let's say someone in the room is thinking about this, whether they've already filed or they're contemplating filing, but they're a little hesitant. And we put content up on the website that Matt and Adam have authored for us. But what should folks look for in a reputable service provider or advisor to help them either gain peace of mind that they're on firm footing with a filed claim, or to help them understand that they are indeed eligible or ineligible to file for the credit?
And the IRS has actually issued some direction on this as well, as how to spot a good provider versus maybe one that's not as reputable or not as responsible. Typically, you want to find someone that has tax background, obviously. This is a tax, right? This is a tax credit. It may not feel like a tax credit because it's a refundable payroll tax credit, but it's a tax credit. So you're looking for a reputable CPA that's comfortable with this, or a JD with a, JD in tax that's comfortable with this. People with a background in tax that have done taxes for years. ERC is new, but it's based on other tax credit programs, so someone has experience with programs like this. You're also looking for someone who has a fee agreement, frankly, that doesn't look like it's too good to be true, or that it's too outrageous as well. The IRS has warned against these really high contingency fees of 25, 30% contingency fees. This is kind of a red flag of, well, maybe they're not in it for the right reason. Maybe they're not in it for the long haul, kind of a thing. So look for those. I think you also want to ask questions about how do they document your claim, and if you get audited, are they going to be able to support you during an audit? Because if they say, hey, we don't, once we deliver it, you're on your own and figure it out on yourself, that can be a red flag as well. You want to make sure that they're going to be around, that they're going to be able to support you during an audit, that they're going to be able to provide to you at the end of the project, they're going to be able to provide to you a file. It's going to have documentation in it. Like Tom said, if it was the gross receipts, that's math, but they should give you the math. They should be able to give you and show their work and be able to show you how they determine that you met the gross receipts test. And frankly, if gross receipts isn't always the easiest term to define in a company, especially quarterly, if it's the government order partial suspension test, there should be an analysis. There should be citations of that stuff. If they're not able to commit to that level of a deliverable, they may not be the right provider.
And I'd also add, Matt, use your gut. If you get on a call with someone and they tell you, hey, you are absolutely going to get $26,000 per employee, be skeptical. The person that you're connecting with on the other side should have a healthy dose of skepticism about your fact pattern prior to committing anything to you. So if you talk to someone and they're asking you good questions, and they're trying to understand your business and understand your fact pattern, and that person on the phone is not entirely convinced that you have a valid ERC claim at the beginning, but maybe gets comfortable then working with you, maybe further into the conversation, and they understand your business, they understand you, your story, then that's the hallmark of someone who's listening and could be a good provider.
Yeah, I agree with all that, although I've got a slightly different take maybe on the contingency fee thing. And that's always a big thing and something you have to worry about. But keep in mind, this credit was enacted at a time when businesses were starved for cash. And I can tell you, so I just did a review for eligibility where it's actually the auditors are coming along and looking at the financial statements, and they're talking with the company about reserving for the credit. You know, how much of it are you really entitled to? So they needed second layer of advice to come in and really get the auditors comfortable with not taking a reserve. And this particular client operated in, I think it was 40 states. So really intensive review, cost a couple $100,000. Now, go transport yourself back to 2020 and 21. Yeah, there are a lot of businesses that didn't have a couple $100,000 lying around. And so the contingency fee aspect there, you know, I have this in the back of my mind when the credit is designed to pump money into small businesses. Are you going to make the businesses pay, you know, like a participation cost to go out and get that level of review of analysis, you know, in order to file for the credit? So, you know, there are some contingency fee providers, certainly if they're going to, if they contact you instead of you contact them, you know, that would definitely be a red flag. If they tell you you're certainly eligibility, or they're going to tell you they can determine it in 8 minutes or whatever, red flags. But I don't have as big a problem about, you know, if there are people out there have a lot of expertise in the space and that's the way you want to fund it, you know.
I agree with that, Tom. And I like what you said as well. Like if somebody can't have that conversation with you about what your reserve could be, that may be a red flag, because there's more to just the credit claim. There's a 280C adjustment, for example. There's an income tax offset to this credit that you need to be aware of. And I've spoken to companies who felt like, hey, the credit with the 280C offset, after I pay you, after I pay my CPA, maybe it's not worth it to me. I didn't know there was the income tax offset. It's not enough usually to deter participation, but if your professional provider can't explain that to you, if they don't understand the credit well enough to explain to you what the risk may be, what the reserve could be to your auditor if you have one, what the 280C offset could be from an income tax perspective, then maybe you're not in the right hands as well.
Yeah, I think what we've seen recently with the issue with contingency fees, and I think the reason why the IRS has flagged it is because there are some, no one on this stage obviously, but there are some organizations that have been structuring these contingency fees so that it's contingent upon your receipt of money from the IRS, full stop. Right. There is no obligation if you are then audited or that money has to be repaid to the IRS because they subsequently audited and disallowed your claim, that your arrangement with this provider is such that you have no recourse. They get their money, they get to keep the money no matter what, and then that would leave you on the hook for the entire amount, including you know, interest, penalties, and whatever contingency fee you paid to the organization. So, I mean, I think it's just, again, it's common sense. Ask the questions you probably ask of any other vendor. You know, like what does this agreement entail? You're going to help me file the claim, and then what? You know, are you going to help me? What does it look like if we have to answer any follow-up questions from the IRS, and what role do you play in that, and you know, et cetera, et cetera. Any closing thoughts, guys? As we leave here, I mean, what I think I'll start with mine. This is a benefit that Congress intended. If you qualify for it, you should, you know, with competent counsel, you should claim it. I mean, that's what it's there for. So don't leave this session today or read all these headlines and think this is you know, some attempting, you know, evil scheme here. It's not. This is a benefit that was intended to help and in this case reward businesses who kept employees on payroll during trying times. And so if you believe you qualify, absolutely consult a qualified, reputable advisor, and if appropriate, claim the credit.
I agree with all that. If you haven't claimed the credit yet and you're thinking about it, I'd probably do it sooner rather than later. One of the legislative proposals that's floating around is to accelerate the deadline. They already did one thing retroactive because initially the credit was supposed to run through the fourth quarter 2021, and then they retroactively said, nope, only going to the third quarter, so there is some history there. You know, I just wouldn't sit on it.
I would just echo what we've already said, especially what Watson just mentioned, is this is a good program. It was meant to help businesses. The legislatures had to pass it in an emergency environment, so I'm not going to fault them for some of the gray areas, and tax there's almost always gray areas. That's why tax attorneys exist. But if you haven't claimed it yet and you're considering claiming, or if you have claimed and you have doubts, find a reputable provider, whether that's an attorney, whether that's a CPA, whether that's somebody who's been doing tax credits for a while. Find somebody who can speak to you about the risks and the benefits intelligently, and not someone who just is making promises trying to get you to close the contract. There's a lot of reputable providers out there. Find one and make sure you're taken care of.
And I might just add that if you're being thoughtful and you're thinking about this thoughtfully with concern, with regard for the statute and the IRS and the guidance, then you're not the person the IRS is trying to encourage not to file per all of the things that they've been sending recently. And so to the extent that you're thoughtful, you have some healthy dose of skepticism, as we talked about earlier, and you're not sure, then it's absolutely something to explore. What everyone in the IRS is trying to avoid are the folks that are just, I'm going to file this and get every last dollar, cross my fingers, and I can sleep at night no matter what I do. If that's not you, then you should absolutely explore this.
Any questions? We will linger by the breakfast bar if you guys want to chat with any of our guests. But Lindsay, thank you so much for putting this together, and thank you all for joining us.
Thank you.